All right, in this video, I'm going to talk about group term insurance. So for group term insurance, this is going to be term insurance that covers eligible employees typically. So this is going to be through an employer. And pretty commonly, employers will have some amount of insurance that's available to the members of the group, which are the employees. And generally, this can be either a fixed amount per person or perhaps linked to income. So they might say some multiple of income or up to some specified amount. And so basically, it's typically pretty limited. So this would not be the amount that you would need probably for all estate planning purposes. But it might help cover some level of costs, funeral expenses, et cetera. So this is generally paid by an employer, and therefore it is considered to be a benefit to the employee. And if you think about that, if this is a benefit to the employee, then normally you would expect that that would actually trigger taxes since you'd be receiving a benefit of some sort. But the cost of the policy paid for by the employer is considered to be tax exempt for policies up to $50,000, as long as the employee does not meet certain ownership criteria. So if you are a sole proprietor, partner in the firm, or if you are a part owner in certain types of corporations that are then paying for the policy, then in that case, then the cost would not be tax exempt. But if you're just an ordinary employee at a firm that does not have any of those ownership interests, and as long as the policy is $50,000 or less, then the amount that your employer is paying for the policy would not be considered a taxable benefit that you would have to pay taxes on. So if you are dealing with a situation in which for whatever reason, you are working for a company and your employer is paying for more life insurance than the $50,000, then the premiums above the non-tax exempt amount would be subject to tax. So if you had working for an employer and your employer was paying for the premiums for a policy that was, say, $200,000, well, the first $50,000 we don't have a problem with, but then the extra $150,000 is above that, and so the premiums on that portion would then be non-tax exempt, and therefore you'd be subject to tax for that. Now, in some cases, those group policies can be converted into a permanent cash value policy, but that comes with some interesting issues, and that is that basically what would be happening here is while you're working for the company, well, just keep letting the company pay the premiums, right? If you left the employment of that company, sometimes that can be converted into a permanent cash value policy. So basically, you would pay a cost to make that a permanent policy in place. But if you think about kind of when that would make sense, generally the kind of situation that you'd be facing there would create an adverse selection kind of a problem here. Because the kinds of people who would be looking to convert that into a permanent cash policy might be people who are generally older, maybe they're retired, so they're not working for the company anymore. So if they're older, the mortality rate is higher, so that's going to be more expensive for the insurance company. Or perhaps they are ill, and so if they're seriously ill and they are stopping their employment, that means higher risk of mortality. So that would tend to make it more expensive as well. So the kinds of people that would be converting that group policy into a permanent cash value policy when leaving the employment of the company probably are those who are have insurability issues from a life insurance standpoint. And therefore, there's a good chance that those policies are going to be pretty expensive. So it's not necessarily something that you would that would always look attractive if you are just leaving the employment of the company. The person's generally healthy, those sorts of things. So if there are other insurance options available, probably those would make more sense. But if if the person involved is perhaps has considered uninsurable for other reasons and is leaving the employment of their employer, then it's an option. So that's something to think about. And there are some other forms of group life insurance that are possible as well, but I won't spend a lot of time on that, especially since for most individuals, the group term policies that they encounter are basically through their employer. So hopefully this kind of covers some of the main highlights for group term insurance policies, and hopefully it helps. Thanks for watching and have a great day.